Hi friends, welcome to a new video. This is on SME IPOs. You know, SMEs are small and medium sized enterprises. They are very small and comparatively new companies. They are also allowed to raise capital from the general public. There is a separate platform for such companies in stock exchanges. It is called the SME platform. In BSE, it is called BSE SME, and in NSE, it is called NSE Nowadays, even institutional investors are showing high interest in SME shares. Hence, SME IPOs are becoming popular in capital market. From this video, you can understand details of an SME IPO. I am your Sanil Perumthottath. After watching full video, and if impressed, please like the video, share it to your friends group and post comments. Also subscribe and press bell button. Nowadays, SMEs, small and medium enterprises, also can raise fund from capital market. They can also come to primary market and raise fund. It all started in 2012. There is a separate platform in both the exchanges, NSE and BSE. In BSE, it is called SME, BSE SME, and NSE, it is called NSE Emerged. In order to get listed on the exchange, the company have to come out with their IPOs. Yes, SME is a small and medium enterprise, but it should not be a subsidiary company of any big company. It is a non-subsidiary and they are independent small companies. And the capital, the paid up capital after the issue, the post issue, it should not be lesser than 3 crores and maximum 25 crores. As I said earlier, BSE and NSE are having a separate trading platform for SME shares, BSE, SME and NSE Emerged. The members of the exchange, all the stockbrokers, members of NSE and BSE are eligible to trade and supposed to trade in the SME segment also. So you can approach them for trading in the secondary market also. The market timing is same as the other shares trading. For listing of SME shares, the exchanges are insisting on certain requirements. First is that the company should be a public limited company. It may be a partner, proprietorship or a partnership firm or a private limited company, but it should convert to a public limited company. Then the company's net worth in the latest audited financial result should be at least 3 crores. The company's net tangible asset in the latest audited financial results should be at least rupees 3 crores. Company's paid up capital should be at least 3 crores and it should not exceed 25 crores. If it exceeds 25 crores, it has to be listed in the main board IPO because SMEs are supposed to be small companies. There should be a distributable profit for at least 2 years out of the immediately preceding 3 years. That is also a requirement. Then the company must have its own website. And the all financial statements should be shown in the website, and it must enter into an agreement with the depositories, both the depository NSDL and CDSL, because nowadays we are dealing with electronic shares, so it is a must. If there is any pending winding up petition in court, then the exchange will not allow the issue. The issue should be 100% underwritten issue, and 15% of the issue must be underwritten by the merchant bankers himself. Underwriter means a bank or a financial institution that pledges to buy all unsold shares in an issue of new shares. Thus the issue is guaranteed success as the underwriters will buy whatever is unsold in the market. That is underwriting. Then another condition is that there should be 50 allottees in the IPO. Allottees devotees means subscribers. There should be at least minimum 50 subscribers in the issue. The main point on SME IPO is that the lot size for trading and application is 1 lakh, minimum 1 lakh. That is the main peculiarity of SME IPO, and the main board IPO it is only 15,000, but it is 1 lakh in SME IPO. And then the company has not been referred to BIFR. BIFR means Board of Industrial and Financial Reconstruction. That is for sick companies. That means the company should not be a sick company. Now let's see some comparison with the main board IPO. Minimum number of allottees should be 1,000 in main board IPOs. But in the case of SME, it is only 50. Then about underwriting, it is not compulsory in main board IPO, but 50% compulsory subscription required for the institutional buyers. And underwriting is mandatory in SMEs. 100% underwritten with the merchant banker underwriting 15% in his own account. Then about track record. SEBI insists stringent norms in case of main board IPOs, but it is relaxed norms in SME. Then offer document vetting. It is by SEBI and by stock exchange in the case of SMEs. Vetting means examining and approving. Then about IPO lot size, it is only 15,000 rupees in the case of main board IPOs, minimum lot. But in the case of SME, it is 1 lakh. Then IPO time frame is 6 months onwards, and in SME 3 to 4 months. Then in reporting requirements, it is quarterly in main board, then half yearly in SME IPOs. SMEs are usually very early in their life stages. Investing on SME shares means sometimes the company will become a failure, and sometimes the future will be very bright and the company will become a multi-bagger. Lot size is also a challenge in SME IPOs. Minimum lot size is rupees 1 lakh in SME IPOs, but in main board IPOs the minimum lot size is only 15,000 rupees. And suppose the lot size is 2,000 shares in SME, it will remain as same in the secondary market also. You have to deal in 2,000 shares, buying and selling. You cannot buy or sell single shares. Only that market lot size, that will remain in the secondary market also. That is also a challenge in SME IPOs. That means investors cannot buy or sell in fractions of lot size, which makes these stocks highly illiquid. But in main board IPOs, where the concept of lot size is limited to primary market at the time of application only, and the subsequent trading can happen in multiples of 1 share. In the main board IPOs, SEBI plays an active role right from the vetting of prospectus and give observations. But in SME IPOs, mostly managed by stock exchanges, as such, a draft process of an SME IPO candidate is not examined by SEBI. There is no role for SEBI in SME IPOs. Yes, higher element of risk in absence of stringent disclosures and profitability requirements, but also present a real possibility of investors getting stuck with illiquid stocks, big lot size and limited liquidity. In main board IPOs, in case of companies with a profitable track record, the retail investors will get 35% of shares. But if it is a loss, it is not that much profitable, the retail investors will get only 10%. That is the law. That means SEBI is safeguarding the small investors, retail investors. Friends, there are so many SME companies are flying high in the stock market. You can also apply for that. If you have confidence in the company and having a good risk appetite with you, you can apply SME IPOs through ASBA facility like any other shares. You can apply for that, and in secondary market your stockbroker will help you in buying and selling SME shares through the SME platform. With the relaxed listing norms and minimal cost of listing when compared to the main board, the SME platforms are ideal for the companies who wish to raise capital to meet their growth requirements. Support from the exchange boards increase the number of SME stocks on the exchange, and good results are encouraging more and more investors to invest in the SME segment. These are the details of SMEs on stock market. Please like the video, share it to your friends group and post your comments. Also subscribe and press the bell button. Thank you very much.